This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, February 26, 2015. Euro dollar. So the price action hasn't been too exciting in this market, with the price defined and confined between a very tight range since late January between 1265 and 1534. We're going to need to see a break on either side for clearer directional insight. A break back above 1534 would open a more significant correction towards the 50-day moving average, while back below 1265 would keep the bearish structure, the immediate bearish structure intact, with a focus on a retest of the recent 11-year low at 1098, which guards against the psychological barrier at 110 further down. Sterling dollar. So cable continues with its impressive correction after the market broke above 54.85 on Wednesday to now focus on a measured move objective at 55.90. The market going back several days had been confined to a range between 52.70 and 49.50, and that break of 52.70 opened an equal move projection towards this 55.90 area. So expect the market to come into some resistance around this area, with the more underlying longer-term downtrend still firmly intact and a medium-term lower top sought out. Dollar yen. Not much going on with dollar yen. The story is the same. The market is locked between in the middle of a range, between a well-defined range over the past several weeks that's been defined by the 7-year high from December at 121.85 and that key low in December at 15.55. So ultimately, we're going to need to see a break on either end for clearer directional insight. But given the overall bullish structure here, the market is favored to break eventually higher above 21.85 and towards 125 further up. But in the interim, look for any setbacks now, given the bullish structure to be well supported ahead of 117, while a break back above recent highs that we saw this week at 119.84 will be required to sort of get the upside going again and increase the prospect for a retest of that 121.85 high. Euro Swiss. So Euro Swiss has been consolidating over the past several sessions, but it continues to slowly grind higher and recover out from that significant decline we saw, that historic decline we saw from several weeks back to record lows. The market is now looking to establish above 108 with a focus on a next measure move extension towards the 110 area. Look for any setbacks to be well supported ahead of 106.50, while only back below 104.15 would delay the current recovery outlook. Aussie dollar. So an important close for Aussie on Wednesday, with the market taking out some key range resistance at 78.76. The close above 78.76 does suggest that the market could still head higher now and within this correction and extend the correction up towards a measured move in the 81.25 area. The market had been consolidating between 76.25 and 78.76, so an equal move would take us up to the 81.25 area. But again, this market is still locked within a well-defined downtrend, and if we do see a push up to 81.25, it would be viewed as corrective with a lower top sought out ahead of a bearish resumption. If the market can take out support now, which comes in at 77.39, about 77.40, it will put the immediate pressure back on the downside. But until then, don't rule out the possibility for additional upside towards 81.25. Dollar CAD. So dollar CAD, after breaking to fresh multi-year highs at 128 back in January, has been consolidating. Now the market could see additional correction to the downside if we break below key support at 23.50, and that could expose a measured move to 119 further down. But again, this is still considered to be a correction, and the uptrend is firmly intact, with the market seeking out a fresh higher low ahead of a bullish resumption above 128 and towards the 2009 peak at 130.65. If the market can hold above 123.50 on a close basis, then we could see a more immediate higher low in favor of that bullish resumption. Kiwi dollar. So Kiwi has continued to extend its correction after basing out by 71.76, and the market is consolidating just under some previous critical support at 76.09. This had been a base in 2014, and if we do see this correction extend higher, it might likely find resistance by this previous support, and will have a difficulty extending gains much beyond in favor of a resumption of what is very clearly a more well-defined downtrend. Ultimately, with this market, only back above 80 would compromise the bearish outlook. SPX 500. So the S&P 500 has broken to yet another record high on Wednesday, with the market trading up to 2120 ahead of the latest minor pullback. At this point, we're going to need to see a break back below 2083, the low from the 17th of February, to take the immediate pressure off the top side, while a break back below and a close below yesterday's low at 2109 would alleviate a little bit some of the topside pressure. But until we break below 2083, the focus is clearly on additional gains, with the market potentially now exposed to the 2150 psychological level over the coming days. Gold. So gold, after coming under pressure over the past several sessions since mid-January, has finally found a base or a potential higher low around 1190 this week. And you can see here the market has been trending higher since 2014, since establishing that low back in November of 2014 at 1130. So despite these pullbacks, there still looks to be the prospect of the market forming a major base. And with the higher low now sought out at 1190, we could see a bullish resumption back towards the recent highs around 1308 and towards 1345 further up. Really, only a close back below 1190 would give reason for concern and delay this basing outlook. Euro sterling. So euro sterling is a really important chart to take a look at right now, with the market, basically this is the monthly chart, and the market's been coming under pressure since topping out in 2008, has been locked within this downtrend, and at this point we're seeing some intense pressure as longer term studies now track an oversold territory, and the market approaches some critical support going back to 2003. So if we look at this monthly chart, while the market is clearly locked within this downtrend, we're now coming in to test this previous resistance, this peak at 2003, which had been a formidable resistance point. So as the market gets down to 72.55, there could be risk for some form of a counter trend and a compelling, at least medium-term or short-term base ahead of some form of a major correction in this market. So that's, I think, what we should be looking out for with this market over the coming sessions as euro sterling comes into focus. But again, 72.55 is that key level, and with the market trading above 73 right now, expect this level to be tested before the consideration is to be given for the potential for some form of a correction and mean reversion. That's all for today.